So the market losing about 300 points. Is it the contagion effect of what's happening internationally?
Well, it's quite possible because we're coming off the back of 4 strong days of positive gains. We've been in positive territory, and then between yesterday and today, the market has suddenly turned around, and we're seeing some negative sentiment coming through. So yes, I think there might be a little bit of contagion.
Okay, and so obviously we're waiting to see what's going to happen in Europe with the meeting of European leaders with the Greek Prime Minister. We're waiting to see what comes out of G20. So probably this bearish trend will continue for the next few days. But on the good side, good Q3 results. The banking index in general up 7.1%. How will that lift the market going forward?
Well, we're expecting to see some more strong results. I think most of the Q3 results are in now, and the positive news has been priced into the stocks. Like you said, the banking stocks have seen an improvement, a couple of them in the last 4 days. I think about five banking stocks were the key drivers of those gains, and we expect them to firm up and, on the back of the positive news.
All right, bonds continue to trade well. The most active bond, though, is the federal government bond for the year 2030, trading at 10%. Why is that?
Well, we think there's been interest from the pension funds on that bond because, they have a very long-term view of the economy. And if you look at the way interest rates have been in the past couple of weeks, they've been on the up. So this might be a good time to, even though the yield curve is a bit inverted at the very long end, it will generally be higher than it is when rates are low. So if you're looking at a very long investment horizon, this might be a good time to lock in those good yields because rates could go back to single digit again, and then you'd have been locked in for a long time. So that's where the interest in that tenor tends to come from, is the PFAs.
What are we likely to see by way of trends as we're talking about these yields? Because a fortnight ago, we were talking about 18%, very good returns on government securities.
We think they'll still continue to go up. However, there's been liquidity in the system and there's been a lot of interest. In fact, if you look back at the stock market, I said we had you've seen some negative news coming from there. There's probably been a little bit of a switch as well from equities into fixed income, because fixed income, for sure you're going to make 15% over a given period, you're going to make 16%. So that demand, there's been some demand in that market, and that of course tends to push yields down a little bit.
Concerns, though, have been raised that we could be seeing a lot more robust activity on the fixed income side of the market if only we wouldn't use secondary platforms. We brought it more mainstream, brought it more to the retailer. What are your views on this particular debate that's unfolding?
Well, that's possible, and in the last week or two, ever since we saw rates move so dramatically, there have been quite a lot of meetings between the money market, the dealers, the chief dealers, people who move markets. We've been trying to decide how do we deepen the market, how do we make sure that we're open for all the trading hours that we should be, and ensure that trades don't dry up, trading doesn't dry up during the day, because we've had a little bit of that. So a lot of that has been going on. There have been a lot of improvements. I know for a fact that there are some suggestions coming through that are going to be looked at over the next couple of weeks. Possibly may not get going properly until 2012, but at least discussions are on the table, and there should be some deepening of that market.
The Naira at 157, Naira 25 Kobo, so it's looking a lot improved than what we've seen recently. Is it due to dollar weakness or due to so many measures taken by the CBN in recent weeks on the interest rate front and also on the regulatory front?
It's probably a mix. Some dollar weakness, but internally, what we've seen, we may be heading for convergence again. From the comments we've been getting from the central bank governor, the kind of band that they seem to be targeting, the central bank seems to be targeting 154, 155, and there's been weakness at the official window. This week, CBN has probably offered the lowest ever amount that they've done maybe in 2011, or when there hasn't been a public holiday. $180 million on offer today, $200 million on offer on Monday. And the level of unmet demand has been relatively low considering what we used to see before. So demand in that window has softened. On the interbank market, the Naira has strengthened because on the back of supply, there's been supply from the oil majors, and then there's been a curtailing. If there were any abuses in the system, those have been curtailed a lot by the recent pronouncement. So yes, it's a combination of factors, and definitely the CBN actions have contributed immensely. I would say 80%.